Good morning, Bitcoiners. Hello, and welcome back to another edition of your Bitcoin economic calendar. The news you need to know for the week ahead in Bitcoin. I'm Mauricio Di Bartolomeo, co-founder of Ledn, and today is March 15th. We have a very exciting issue this week as we're covering a lot of activity. For one, we're going to be touching on the Bitcoin bond from El Salvador, which is scheduled or reported to be issued in this week imminently. In addition to that, we're going to be diving into the recent short squeezes that we've been seeing in Bitcoin and what insights we can draw from that price action. Last but certainly not least, we're going to talk about the Fed, who is scheduled to finally raise rates in this week's FOMC meeting. So lots of cover. Grab your coffees. This is going to be a really great one today. Starting as we usually do with Bitcoin, we see that Bitcoin finished last week slightly down 1.69%, but we see that it's basically recovered since and made back all of that ground so far this week, up 2.39% for the week. Broadly speaking, last week saw a continuation of the risk-off trade with safe haven assets like gold, for instance. Here we look at the chart. Gold had a positive week, up 0.88 basis points, as well as the dollar index, again, also had a positive week last week, up 0.63 basis points. And that, again, is the sort of safe haven assets rising. And the opposite of that, we see the S&P 500 took a 2.66% hit last week. NASDAQ also took a big hit last week, down 3.87%. And the sort of poster child for the risk-on trade in equity markets, the ARK Invest Innovation ETF fund, we see that it took a big hit last week, down 7.72%. And so far this week, it is down another 5% so far into the week. So again, really just we can see a bit of a continuation from that risk-off trade. Now, switching gears and looking at Bitcoin, again, we saw that it held ground quite well last week, considering there's been a few sort of spikes and reversals back in the last 2 weeks in Bitcoin, and we're going to talk about that because these are tend to be evidence of short squeezes. So we're going to take a look at what might be driving that. Now, going back into the risk-off trade and how that is expressing itself within Bitcoin, there's a couple of interesting things to look at. First, let's take a look at the open interest in the Bitcoin futures markets. And that one we're going to pop up here just shortly. All right. So this chart on your screen right now is the aggregate open interest for Bitcoin futures contracts. And as you can see, Bitcoin investors are also taking some risk off the table. And it is basically, you can see it as less leverage or less open interest in the futures markets. So again, the futures contracts are instruments where many investors typically use a lot of leverage. So the higher the open interest can be seen as a proxy for leverage in the system. So if we look at the open interest right now, which is currently sitting at about $14 billion, which is still relatively high based on the lows for the year of 11.6, we see that they're still nowhere near the tops or the peaks that we saw in April, which was the last, one of the previous peaks of 2021 when the Coinbase listing happened. And then there was another peak in November again, and this was right before the Fed essentially announced in its November meeting that it was going to start tightening policies. So both times, both in April after the Coinbase listing and in November after the Fed made its announcement, we saw big drawdowns in open interest along with big drops in the price of Bitcoin. We see that setup is not existing right now. So this sort of setup that sometimes leads to cascading liquidations to the downside when there's a lot of leverage and the market is at a high point, we're not seeing that setup right now. We're in fact seeing a lot less open interest in the Bitcoin markets, actually almost half of what it was back in the November and April peaks for 2021. So this is a potentially healthy sign for the market, as investors, again, when investors take on a lot of leverage, they are forced to sell when the market turns in the other direction. In this case, if they are leveraged long and the market goes lower, then they can, and if investors cannot meet their additional collateral top-up requirements, then they will get liquidated, and essentially that results in a cascade of prices downwards. When there is less leverage, which is what we are seeing now, that chance or that risk of cascading liquidations to the downside become reduced because there is just not that much leverage in the system. So typically we see investors take on speculative leverage to the upside at the top of a bullish market cycle. This is what happened. Look at notice the spikes here on April 14th, which was, if we go back to the Bitcoin chart, this was April 12th. So this was like the first peak. And again, going back to the second peak, which was November 9th. And if we overlay that to this is the November 9th. So the peaks of the futures open interest coincide with the Bitcoin local high peaks. And again, this reinforces this idea that typically we see investors take on speculative leverage to the upside at the top of a bullish market cycle. Again, that was highlighted by the spikes that we just covered. Similarly, investors can start taking speculative bearish bets with leverage to the downside towards the end of a bearish cycle. And the last few weeks, we've seen this sort of short interest for Bitcoin, balloon. And in fact, last week, the short interest for Bitcoin in the Bitfinex exchange reached its highest point in all of 2022 so far. We've seen actually that has since come down, and we're going to get right into what we can see or what we can infer from these big moves and spikes in short interest. And again, reversing back to the mean. So there are many investors, just to kind of tie the narrative here. This being said, with all of this sort of risk-off appetite out in the streets, and many investors wanting to essentially place that risk-on trade, there's been many investors that are openly short Bitcoin as part of their risk-off portfolios. And here is an example from a really good macro investor on Twitter, Macro Alf. And as you can see, he points out very openly that he has been, his portfolio position includes a short Bitcoin call. So again, this is just part of why so many investors are taking on this sort of risk-off trade, and they're using Bitcoin as part of that trade. Now, additionally, just to kind of look at how this is shaping out, we have seen that the funding rates on the Bitcoin futures or the Bitcoin perpetual future swaps have been bouncing in and out of negative territory over the last few weeks, and we're going to show you what we mean by that here. Let's just pop one of these for simplicity. So here we have the futures funding rate, a perpetual futures funding rate for an exchange like FTX. And this has been, let's open it for the last 2 weeks since the Ukraine invasion started. So if we zoom into here, this line here is 0. And as you can see, the funding rate has spent basically the same amount of time on the negatives than on the positive sides over the last 2 weeks. But the interesting thing is if we look at the price action over those last 2 weeks, we see that in fact Bitcoin has been basically rallying. It has made higher highs, and we see very clearly that the trend has been upwards. And so what this tells us is that investors have been essentially trying to short Bitcoin as it has been moving higher. Which is very interesting because, again, they're trying to go against the tide. And we start seeing some of this, speculative bets to the downside. And they start feeling a little bit like the speculative bets to the upside that people were taking around like the 69 level. And what this all, kind of want to tie this all up and say that when consensus starts building in any particular direction, it is usually not a bad time to start looking the other way. In other words, when enough people seem to be getting short Bitcoin, it's not a bad idea to start looking at the arguments for being long. Now, we have seen some glimpses of short squeeze action since February 24th when the Russia-Ukraine war started. And this happened, so like just to go through the anatomy of the short squeezes here, because we haven't really covered them. What we're going to do here is we're going to compare the Bitcoin price with the short interest. So just 1 second here, we're going to overlay this with, first let's pop up the Bitcoin shorts, and then let's pop up the Bitcoin price. So as you can see here, as you can see from the lines below are the short interest in Bitcoin. The orange line is basically the price of Bitcoin. As you can see, whenever Bitcoin is reaching the basically end of the bottom cycle, or the bottom of its local cycles, we see a sporadic increase in short interest that basically gets reverted back as those positions get squeezed. And we saw that basically at the base of this rally here around summer of 2020. We saw it again in the summer of 2021. And we're starting to see some glimpses of this building up towards the summer of 2022. So again, this is very interesting to pair that up. And what we have seen here in the most recent ones is, if you look at there's a couple of ones here that we can zoom into. One is the Ukraine invasion here. So a lot of investors went short when the Ukraine invasion happened, and then they were squeezed when they were surprised to see that Ukrainians and Russians were rushing to buy Bitcoin and the price wasn't going lower. It in fact went higher. So these investors got squeezed down. The price of Bitcoin then reverted back down, and we saw investors take on another big set of shorts. And again, we saw those shorts have to be coming back running for cover when there was a better than expected or more optimistic than expected executive order out of the United States. So that was really interesting, again, to see how these two kind of short, rallies and then drops have occurred, because, again, so many people seem to be running to try to get short Bitcoin when it breaks below 40K. So we can see some of this news highlighted here in a CoinDesk article, which was last week's, saying that $95 million worth of Bitcoin shorts were liquidated. And again, this just speaks to this short squeeze activity that we have just discussed now, based on investors taking this short position, and Bitcoin essentially reacting in a very opposite direction. So with so much interest building around shorts and being short Bitcoin, let's explore a couple of potential positive catalysts that could be in the cards for the next few weeks and could send prices higher. Okay, so one of these potential catalysts for Bitcoin could be this Luna/Terra's $1 billion Bitcoin reserve, and we're going to get into that shortly. So over the last 6 months, there's a stable coin called Terra, and there's a stable called UST that runs on the Terra blockchain, and this stable coin has doubled in market capitalization over the last 6 months, from 7 billion to now over 14 billion. Now, this stablecoin protocol, recently announced that it had raised over $1 billion to purchase Bitcoin for its reserves. And that purchase of that Bitcoin could potentially be executed in the coming weeks. More details on this in our DeFi section ahead. Now, another very interesting development that is in the cards for this week is the El Salvador bond. So as many have already read, the government of El Salvador has announced that it has plans to launch or issue its Bitcoin bond in this week. Actually today, March 15th is the stated date. The bond offering is reported to be for $1 billion, and 50% of the proceeds would be used to purchase Bitcoin. So if the bond is 100% subscribed, meaning that investors purchase the whole billion, this would imply that the government of El Salvador would have a $500 million buy order to purchase Bitcoin. This order would be meaningful given the recent thin volumes in the Bitcoin spot markets. The same goes for the Luna Terra purchase. Now, to be balanced, let's look at the wildcard events that could add further selling pressure on Bitcoin, basically send us in the opposite direction in this coming week. One of these is essentially we don't have an article for this one, but essentially it's The Fed. So the Fed could overshoot its rate hike, raising 50 basis points instead of 25 basis points, which is what the market broadly expects. This would be an unexpected turn of events, and we're going to discuss this in more depth in our blog version. But that is one risk, that the Fed essentially overshoots and tries to cool the economy too fast. The second one that could send things in a different direction is the China crisis that we're starting to see, and that could worsen. China has three big problems right now. Its real estate market is crashing, its stock market is melting down, and this week it had to lock down the cities of Hong Kong, its main financial hub, and Shenzhen, one of its main manufacturing and shipping hubs. This was as a result of the resurgence that they're seeing in COVID cases. Now, everything that's happening in China will certainly impact supply chains for consumer goods, along with capital markets globally. There's a lot of moving pieces this week, and there is the all-important Federal Reserve interest rate decision on Wednesday. More details in our What's Ahead section coming up ahead. And now we're going to wrap up with what is ahead for the week. Remember that by clicking on the link below, you can head to our blog where you can see our analysis on the S&P 500 and equity markets, gold, mining, and DeFi as well. And we have some great insights in this week's issue at the blog, so don't forget you can click there and go check it out. Now, as always, we take you through a summary of economic data that we can expect for the week and the sort of big pieces to look out for and the dates and times for those. So the moment is finally here. It is the week of the FOMC meeting, and the Federal Reserve is finally scheduled to announce its first interest rate hike since December 2018 this week. Now, investors had initially priced in a 50 basis points hike before the war in Europe began. Markets have since recalibrated down and are only expecting the Fed to raise 25 basis points. The Fed will also shine light on its purchase program for U.S. Treasury bonds and mortgage-backed securities. The purchases should have stopped by now, and as they were getting ready to raise interest rates. Details will be announced or should be announced at 2 p.m. Eastern Standard Time on Wednesday, tomorrow, 2 p.m. And the markets will certainly react. Now, we hope that you have enjoyed watching. Again, take a look at our blog version, clicking below. But now we're going to summarize essentially the recap of the data for this week. Wednesday, 2 p.m. Eastern, FOMC announcement. And at 2:30 p.m. Eastern, Fed Chairman Jerome Powell gives a speech essentially on the decision. So that wraps up our show for today. If you enjoyed the show, if you liked it, if you laughed, if you learned something, I welcome you to thumbs up it, subscribe to our channel, share it with your friends. And if you don't yet have a Ledn account, I welcome you to check out Ledn.io and learn how you can start earning up to 9.25% APY on your USDC and up to 6.25 interest on your first half Bitcoin. We also have the best rates on Bitcoin-backed loans if you need liquidity but don't want to sell your stack. And our Bitcoin mortgage, our most recent product, lets you buy a house as big as your stack. Thank you, everybody. Have a great week and see you next time.